Hello everybody, welcome back to our channel. Thanks for joining me today. We're going to be talking about gold and silver and what happened this week. We start with Elon Musk from Tesla making a $1.5 billion investment in Bitcoin. The news has pushed Bitcoin price much higher. In fact, Bitcoin went up 20% with the news. Later on the week, Elon Musk also informed that he is considering to invest in Dogecoin and gold. Nevertheless, gold has not moved up on the news. So let's make one thing clear here. The gold market capitalization is 10 times bigger than all cryptocurrencies combined. So it takes a lot more to move the price of gold up. It also takes a lot more to move the price of gold down, and that's why gold is a store of value. Cryptos can fall 30-40% on a day, but gold does not fall that much. It's a defensive investment. The first thing an investor must do is to protect capital, and gold does that really well. But what Elon Musk is really saying is, get me out of the dollar. The American dollar has lost already 98% of its value since 1971, and it still loses more value every day with all this money printing that we are seeing. The dollar is a sinking ship, and cryptos, gold and silver are seen as lifeboats. I'm not a Bitcoin hater, and I don't think we must choose between gold or Bitcoin. We can have both. Gold will protect your wealth, and Bitcoin can offer high gains, but with high risk. In fact, I had 1% of my portfolio in Bitcoin in the past. At the time, I bought Bitcoin when the price was around $30,000 and I sold around $38,000. So the other day, a friend of mine who is a Bitcoiner asked me, why do I buy gold and silver knowing that the price is manipulated? So let me tell you something. Asset prices can go manipulated up or down, but manipulation cannot last forever and always comes to an end. So if the price of the assets is manipulated up, then after the end of the manipulation, the price will go down. And if the prices are manipulated down, such as gold and silver, when the manipulation comes to an end, the price will go up. That's clear. So when my Bitcoiner friend asked me, why do I buy gold and silver knowing that the price is manipulated? I said, I buy gold and silver because the price is manipulated. If the prices were not manipulated, I would not be able to afford an ounce of gold or silver. So here is the debt clock of the United States. Anybody can access this website and you can check with your own eyes. I put the link on the video description. If you look on the right side at the bottom, you have the dollar to gold ratio and the dollar to silver ratio. This is by the American debt, how many dollars you need to exchange for an ounce of gold and silver. So you need, accordingly to the United States government, the ratio, you would need $4,812 to trade for an ounce of silver and $34,656 to trade for an ounce of gold. What does this tell us? It tells us that gold and silver are extremely undervalued or manipulated, if you prefer. I want to show you guys something else. It's called the Dow to gold ratio. The ratio measures how many ounces of gold you need to buy the Dow Jones, or one share of every company listed on the Dow Jones. To calculate the ratio is very simple. You must divide the points of the Dow Jones by the price of an ounce of gold in American dollars. So if the Dow Jones is at 2,000 points and an ounce of gold costs $1,000, then you divide 2,000 by 1,000 and you have the ratio of 2. This chart measures the ratio for the past 100 years. We can see, analyzing the charts, that there were 3 peaks in the past 100 years. The first peak in 1929. Back then, you would need 18.4 ounces of gold to buy the Dow Jones. The second peak happened in 1966, and by then you would need 27.78 ounces of gold to buy the Dow Jones. The third peak was in 1999, and back then you would need 42 ounces of gold to buy the Dow Jones. What does this tell us? First information, it seems that from peak to peak, there is an increase of 50% on the number of ounces of gold that you need to buy the Dow Jones. The second information is that from peak to peak, there is an average cycle of 35 years. So when the rate is up, gold is cheap in comparison to stocks, and it's time to buy gold because it's undervalued. When the rate goes down, then gold is expensive in relation to stocks. So it's time to trade your gold for stocks. You buy stocks, you sell your gold and buy stocks. Other than that, people who study these charts, this ratio, also believe that the lows happen in cycles too. So these lows happen every 47 years. So we had the first low in 1933 and the second low in 1980. So 1980 minus 1933, 47 years is the cycle. Also, from low to low, it seems that you need less ounces of gold to buy the Dow Jones. If this is correct, then we can predict that the next low will be in the year of 2027. This is 6 years from now. So according to the ratio, one can predict or believe that the peak of the gold valuation is still to happen, and it will be in or around 2027. I'm willing to hold my gold until then and see what happens. Many believe that the Dow to gold rate will reach the lows of 1 as it happened in the past. Today, the Dow Jones is at 31,458 points. So in order the rate to be 1 to 1, in order for you to buy the Dow Jones with 1 ounce of gold, then the gold price would have to be higher than $30,000. So if we go back to the debt clock and see the dollar to gold rate at $34,656, it feels like the government already knows something that we don't. We are in a phase of metals accumulation. It's time to buy and hold gold because it's cheap and undervalued. This could be a safe bet, but keep in mind that you're not going to become a millionaire from a day to another by holding physical gold. Unless, of course, if there is a gold revaluation like happened in the past. But this will be content for another video. A quick note in regard to silver. Premiums on silver are very high at the moment, but it will go back to normal. As you know, over the last few days, there was a massive amount of physical silver being sold. So the retailers are sold out. The retailers that still have a little bit of silver coins and bars, they are charging high premium because the demand is so high and there's a shortage of silver. But once these retailers rebuild their inventories, then the premiums will go back to normal. Premiums on silver will go back to normal. And if you want the price of silver to go up, you must buy the physical metal and hold it. This will end the video for today. I look forward to be with you again. Thanks for watching. Protect your wealth, stay safe, and take care.